Thank you for coming. We have today Stefan Chaikin, and we also have Ken Goodman. How are you guys?
Good. Thank you. Thank you for having us today.
Doing great.
They both are expert on credit, personal credit, and how to fix the credit. And today we're going to talk about how to improve your credit and secure financing to grow in e-commerce. We all know in order to get any type of loans or credit cards, you need to have a good credit. And we have two gentlemen here, experts in the area, and we're going to be talking about it today. So welcome, guys.
Thank you.
Perfect.
So one of the questions that I have is, let's see, what are the important factors that affect the credit score?
One of the most important things with credit is actually utilization. Utilization means the amount of credit the person has on their credit report. For example, if you have a $10,000 credit card, it's very important to always keep it under 30%. For the people that actually don't have credit, there's ways to establish credit by getting, like, for example, a secured credit card. The most important thing, again, is keeping the utilization under 30%. With the 30% utilization, your score will go up like a rocket.
So 30% or below in any credit card utilization that you have. It have to be like a major credit card, so every credit card should be in 30% or below.
Every credit card, from your Macy's credit card to your American Express credit card, and any credit card in between. The magic number is 30% or less. We've seen people, situations where they'll have an example, a credit card maxed out, and everything is perfect. They pay on time, and their scores are in the mid fives. That same person pays their credit on time, keeps the utilization under 30%. They'll be 650s to 700s. So the number one most important thing in credit is paying on time and keeping utilization under 30%. They do that, their credit will be perfect.
How about the increase? You know, the many increase, a lot of business people have many businesses or many credit cards that they need to apply with. How bad is to have increase in the credit?
No, actually, an increase, you mean, so there's different kind of increases. You mean inquiry.
You know, when you try to apply.
I apologize. So inquiries, every time you apply for something, an inquiry gets placed on your credit report. Correct. So if you can keep it under 10 inquiries on your report, you're okay. So it's important, like a lot of people, when they go to try to get purchase a car, very important to tell that sales manager or that finance manager, don't run my credit that many times, because a lot of these companies, what they'll do is they'll run it through 7, 8 different banks, and all of a sudden your score goes down X amount of points. Each inquiry could bring your score down between 2 and 3 points per inquiry on your credit report. So it's very key to keep it under 10.
Under 10 increase per year?
Correct. And then every 2 years, on your actual credit report, it will show the actual date the inquiry was posted to your credit report. All inquiries stay on your report for 2 years. So after 2 years, they actually fall off.
Wow. Okay. As far as how long does typically, let's say you have a low credit score, okay, because you have the credit card maxed out and maybe some late payments or not. What would be the strategy and how long it will take to improve that score?
So it all depends on the type of accounts that are on there. Some accounts are easier than other ones. Collection accounts, medical accounts, charge-offs are actually pretty easy to get off once the account, in other words, is closed. However, when the account is open and if it's showing late payments, it can be corrected in certain cases, but it is more challenging because they're reported electronically. So again, as Stephen mentioned, keep the usage low, try to make your payments on time. But items that are not correct or not on there, or possibly were fraudulently put on there, or you didn't know about, or accounts that just come on, and we see this all the time, those need to be addressed, and they can clearly affect your score. It's also very important to stay on top of your credit. Make sure you're checking it every 30 days, 60 days, or 90 days. If you have a major purchase coming up or a major financing for business comes up, make sure you're on top of it before you actually go for an application.
So it's very important. So what would be your recommendation of way how to be on top of it?
So there's a lot of different reporting agencies. You can go on Experian.com, which is free, by the way, for just Experian. You could also pay, they have an upgrade situation where you can upgrade for $24 a month. That will give you access to all three reports, meaning Experian, Equifax, and TransUnion. There's Identity IQ, there's My Score IQ. Credit Karma is okay. We don't love that because it only shows a picture of two of the three, not the third one.
Okay.
As you may or may not know, and some of your listeners may not know, credit scores can vary tremendously. We've seen scores 50, 60, 80 points difference between the different bureaus. And the reason is because some accounts appear on some reports and some don't. In other words, you may have an Equifax score of 700 and your Experian could be 620. It's because you're showing 2 or 3 charge-offs or collections or late payments on one report and not the other. So they can vary tremendously. So it's important to stay on top of all three and to know that.
Another question, you mentioned many things that I'm very curious about. So one of them you mentioned is, let's say, medical bills. You know, sometimes people, the medical bills can be like crazy, okay? It depends on the situation. But I don't know if I'm correct or not, but I heard that medical bills cannot be reported to your credit report anymore. Is that correct?
That's starting shortly, actually. Up until
Okay.
before, it was up to 500. Anything over 500 could not be reported. Anything under 500, and recently they just changed that.
Oh,
Now,
so whatever is higher than $500 cannot be reported?
correct,
Oh, wow. Okay, so if it's a small bill, then it can be reported.
correct.
But small bill is easy to pay. The issue is with the big bills.
Absolutely right. Right, correct. But
Oh,
that's
wow.
something
Okay.
that if people, any of your listeners have it on their credit report, that's something we can take off easily as well. And
Okay.
medical collection usually holds between 20 and 45 points on your credit report. So if you got 2 medical bills, you're looking at between 40 and 90 points will tank your score right there.
Wow. And how fast can you remove that? Let's say I have I have a claim on my report and it's a medical bill and I cannot afford it. How long is it gonna take you to remove it?
So on Experian, it takes about 10 to 14 days for us to get it off. On TransUnion, it takes 20 days. And on Equifax, it takes 30 days.
Okay.
On Equifax and TransUnion, we actually are forced to send the documents to them certified mail. That's why takes a little bit longer. Experian, we upload it directly to them. They're between 10 and 14 days it takes. So it's pretty quick actually.
Okay. Which of the three credit report is more important, or all three are important?
All three are important. For example, like Audi only pulls TransUnion. Wells Fargo only pulls Equifax. So
Okay.
each major credit card company, each major car dealership manufacturer pulls different credit reports. So each one
Okay.
individually is important.
It's also important to know, I think, Stephen can back me up on this. Depending on where you are in the country, they will pull a different bureau for you. In other words, if you're going for a BMW, you might pull TransUnion here in Florida. They may pull more Experian in California.
Correct.
It is very different and regionally as well, too. So it's important to have all of your scores up as high as you can, because if you know that there's a difference in scores, it could still affect you depending on where you are in the country.
Got it.
And
And what
another
is
important factor
what is
also,
the FICO score? So I understand the score in each bureau, and now what's the FICO score?
so FICO is basically broken down to different FICO. There's a FICO score for a credit card. There's a FICO score to get a car,
Mortgage.
a mortgage. So if you actually look at your credit report on Experian.com or Identity IQ, it will actually show you my FICO score, which means your credit score for that individual thing that you're applying for. So if you're applying for a car, your FICO score might be a 7 or 8. If you're going for a credit card, it might be an 8 or 9. So FICO breaks it down per item that you're trying to apply for.
And how do you know what FICO score you have. I mean, if you go to, let's say, Experian and you see the score, what type of score would that be for which application, I guess, or category that you're applying?
So actually on the credit report, there's a section that will show you. They will show you all in the bottom, my FICO score for a credit card, my FICO score for to purchase a home, my FICO score to get a car. It actually shows you on the credit report.
Wow. Okay.
And
Okay, cool.
actually, to go a step further back, you said something interesting about which bureau is more important. When you're actually purchasing a home to get a
Okay.
mortgage, what they do is they pull all three credit reports, and how they score you, they take your middle score.
Mm,
So it's very important when you're going for a home, they literally will tell you your middle score, which could be Equifax, it could be TransUnion, it could be Experian, is so if you have one credit report that's low and one's high, you're okay because you got the middle score.
mm. So
Not,
you
not,
they add them all three together and then they
no,
divide it.
so that's what I was going to tell you, not to be confused with an average. Okay.
Mm,
So
okay.
let's say you have a 700, a 650, and a 600. You would think the score would be, in this case, would be the same. The average would be 650. However, let's say you have a 720, a 620, and a 600. They don't average it together. They take the 620 score.
The
So
mid score,
not to
like
be
the
confused.
higher, the
Correct,
lower.
correct, correct.
Right. Could be a 600 and a 601 and a 720. They're taking the 601. So it is truly the unique middle score, not an average of all three divided by three.
Interesting. Interesting. The other thing that you mentioned after the medical bills, the charge offs. So how do you get the charge off on your credit and how do you remove it?
Okay. So a charge off is something from an account that you didn't pay, didn't know about, what have you.
A credit card,
A credit card, a gym membership, could be from
repossession.
a repossession, could be from a cable company, could be from anything. So once it's charged off, a lot of times it'll go to what's called a collection company, ABC collection, DEF collection, whatever the name of it is. And we go after that, challenging in different ways that we've done over the last 20 years of having experience going after the original document, possibly maybe if the name is incorrect or something like that. But that's how we go after it. And it's hard for them to verify because sometimes it's an older or closed account and they have to verify within 30 days or they have to remove it. But without revealing all the keys to the kingdom, there's different ways about going about different accounts.
Okay.
People ask us all the time, and here's the biggest, I think, fallacy, I think, with collections. People think like, oh, I paid it off, there's a zero balance, it should come off my report. That's not true. So it doesn't matter whether it's a $50,000 balance, a $5,000 balance, or a zero balance, it still needs to be removed off there, or it shows that you had a collection, which means you had an agreement that was not agreed upon and not paid accordingly and correctly. So no matter what the dollar value is, it's still hurting you. It needs to be taken off the report.
Right, right. There's any other, well, so you mentioned medical bills, charge off. What else can impact your credits, like as far as like somebody making some sort of a claims?
Collection,
Liens, maybe? Collections?
collection accounts, bankruptcies,
Too many
child support, student loans,
inquiries, too many inquiries.
inquiries. Usage is a big thing as well too.
Very interesting about the bankruptcy. So I've been always talking to different people who maybe don't know much about the credits and they when they cannot pay one credit card, I don't know, it could be like $500 and they just want to do the bankruptcy of it. And I think that's the worst path, right, to
Absolutely.
take. And
Absolutely.
can you give me a little bit more information for all our listeners that so they understand that the bankruptcy should be like the last step to take, right?
With credit, we can fix you. We
Okay.
can get the bad stuff off your credit. Bankruptcy means you're basically, depending on what bankruptcy you file, 7 or 10 years, you're stuck. And that's on your report. It's the worst thing you can do. Come to us. We will get the bad accounts off your credit report. We can clean it up, get you a new beginning, a new fresh start. I can't reiterate that literally 7 to 10 years, between either 7 or 10, you are stuck sinking.
So I'll give you a personal story. I'm in the business and I get this all the time. Steve and I get this all the time. They told me I can get a bankruptcy off. They could tell me I can get a bankruptcy off. I'm in the business. I had a bankruptcy and it stayed on my credit for 10 years. So it is super difficult to get off. And anybody that tells you they can do that, please be very, very careful because it is a legal document that you signed and there's a court record of it and it is super difficult to remove. We've gotten lucky maybe one or two times, but it's just maybe on one report out of the three. So please use it as a last step. If necessary, it is sometimes necessary, but believe you me, it's going to stay on your report for the next 7 to 10 years. And it's super difficult to get off and rebuild credit.
What would be the case of really necessary to do the bankruptcy? Because I don't see the way, because let's say you have, I don't know, you're losing properties, right? What the worst case scenario they can be, you do the foreclosure, right? And that will be affecting your credit as a foreclosure, but still not a bankruptcy. So why would people, what would be the reason, the main reason why would actually people need to do the bankruptcy?
There you go. Yeah, so in this case, there's a lot of different reasons. You may have signed for something personally. In other words, let's say you opened a restaurant and the restaurant took you as a personal guarantor on the lease. For a new business, it's very, very common. And let's say the restaurant didn't work out. Now you're responsible for that lease for the next X amount of years. That may be $5,000 a month, $60,000 a year for the next 5 years. There's a $300,000 liability you may be looking at. Bankruptcy may be the way to go out. You may have 4 or 5 credit cards completely maxed out, at hundreds of thousands of dollars, personal loans, those types of things. Maybe you have a vehicle that you want to keep, but you can't pay it. So you go under the protection of bankruptcy and try to work out something.
But in the case of credit cards, let's say, yeah, you have 5 credit cards, you max them out, but what's the worst they can do? I mean, they charge off on your credit?
Correct. Correct. That could happen. Exactly. But again, it is unsecured debt credit cards, but I'm talking about more of the secured debt kind of thing. It does pertain more to cars, property, and real property versus unsecured debt. That is correct.
So if you have a credit card, absolutely do not file bankruptcy.
If it's just credit cards, exactly.
Yeah. Yeah. I have, again, my experience, few of my friends, I was telling them to not do the bankruptcy, but they still don't listen. I don't know. It's like, just if you cannot pay, stop paying. What's gonna happen? They're gonna report your credit card, and then you can, try to fix your credit. That's it. It's not a big of a deal. This happens to many people. But once you file the bankruptcy, that stays for a long time. It's even when you do any type of application, they don't ask you if you filed the bankruptcy in the last 7 years. No, they ask you if you ever filed the bankruptcy.
Correct.
So that's it. You mark yourself for life. But if you had charge-offs or any issue with the creditors, nobody gonna see that. Only the creditor that you had the issue with.
Another instance, obviously, would be people seek bankruptcy protection because of potential lawsuits.
Right.
That's a big factor too. So that becomes a whole legal issue. I don't think we want to get into, but that would be another viable solution if you had that potential liability out there.
Right. Correct. All right. Any other suggestions or comments that you guys would like to share for our audience here?
Yeah, so just if anybody needs our help, we'd love to help people. We've been doing this for a very long time. It started out from a personal thing for me. We went through a downfall in the 2008-9 economic cycle. I went from being a real estate developer to losing homes, et cetera, bankruptcy, and was able to kind of rebuild our lives. We had friends that kind of came along to us and associates that we helped as well. And so now we help individuals, that call us and talk to us. We do a lot of business with mortgage brokers, people looking to buy homes. We had a text message a couple of weeks ago from a guy who was able to buy his grandmother's home in Pennsylvania, sent us a really nice text message. We got his score up. It was 160 points in like 38 days. Again,
Wow.
every result is different, but we're able to help people. We're able to give them another chance at life. And, I guess our message would be, don't let the past determine your future. Just because there were a couple of mistakes made, whether they were yours or not, it doesn't matter. Let's move forward. Let us help you. We try to be reasonable with everybody. We go through everybody's account, line item, and say, hey, look, we feel really good about this, this, and this. This one we're going to have a 50-50 shot at, and this one may be difficult. But you may have all the accounts that were right up our alley. I mean, there's probably nothing we haven't seen over our years with the thousands of accounts and clients we've looked at. So we look forward to helping anybody. Feel free to give us a call, reach out to us, any questions. Me and Steven answer the phone with everything. You're talking to the source. I think we pride ourselves in not turning you over to a salesperson or associate. We handle everything ourselves, paperwork and all that. Do we have people that do other things behind the scenes? Yeah, but we are the be all end all. The buck stops with us.
Well, I personally use Stefan's couple of times for my personal credit, for my wife's credit.
Correct.
There's always things happening, you know, and there could be some wrongs, something that shouldn't be reported at all. Maybe it's something that you did made a mistake, but it always can be corrected. And again, I used Stefan a few times and it was amazing. Always good results. So I definitely recommend.
Give us a call. We're here to help you guys out.
Thank you. Thank you very much for coming. I really appreciate your knowledge and your time. And yeah, all the information, how to contact you guys is going to be on the bottom of this video. And, good luck.
Thank you. I
Very
appreciate
good.
it.
Thank you so much,
Thanks.
Alex.
Thank you very much.
Okay, bye-bye.